Welcome to Case Study Series in Strategy Case Study by skilled MBA Breezm, a 3D printed eyewear startup, faces strategic decisions in a competitive market. The company leverages advanced technology to offer customizable eyewear solutions, addressing diverse consumer needs. This case study explores Breezm's innovative approach, focusing on strategic positioning and market differentiation to overcome traditional eyewear limitations and enhance customer satisfaction. Ill-fitting eyewear is a global issue, causing discomfort and dissatisfaction due to limited customization. This is especially problematic in South Korea, where diverse facial structures clash with standardized Western frames. Traditional eyewear's inability to accommodate these differences highlights a significant opportunity for innovation in personalized eyewear solutions. Zenma Park, co-founder of Breezm, envisioned personalized eyewear technology and a direct-to-consumer model. Woo-suk Sung, another co-founder, contributed technical expertise in artificial intelligence and three-dimensional printing. Founded in 2017 in Seoul, Breezm aims to revolutionize the eyewear industry through innovative technology and personalization, addressing the challenges of ill-fitting eyewear. Breezm's solution leverages artificial intelligence-powered facial scanning to capture precise facial measurements, creating unique digital profiles for each customer. Custom three-dimensional printing ensures frames are perfectly tailored for optimal fit and comfort. Their direct-to-consumer model eliminates middlemen, maintaining quality and offering premium eyewear at competitive prices. Breezm's current business snapshot reveals a $4.5 million annual revenue, indicating strong market acceptance. With an IPO target set for 2027, strategic growth decisions in 2023 are crucial. This year marks a pivotal inflection point for determining scaling strategies and investment priorities, essential for maximizing valuation and ensuring long-term success. Breezm faces three strategic paths: optimizing Seoul operations to enhance efficiency and margins, expanding nationally across South Korea to capture new customer segments, or pursuing global growth for rapid scale and brand recognition. Each option presents unique opportunities and challenges that will shape Breezm's future trajectory and initial public offering readiness. Optimizing Seoul operations focuses on enhancing local efficiency and profitability, creating a robust base for future growth. Benefits include improved margins and stronger unit economics. However, risks involve potential growth plateau and losing first-mover advantage. This strategy solidifies Breezm's foundation but may limit short-term expansion opportunities. Expanding across South Korea allows Breezm to grow while leveraging cultural and regulatory familiarity. Establishing a presence in major cities increases market share and brand recognition, benefiting from economies of scale. However, competition on price and established brands pose challenges, alongside capital needs for new locations. Global expansion targets premium eyewear segments in high-paying countries, offering massive market opportunities and international brand recognition. It promises a higher initial public offering valuation and first-mover advantage. However, it involves complex regulatory compliance, high customer acquisition costs, and requires localization and partnerships, making it capital-intensive. Assessing Breezm's financial readiness is crucial to ensure capital reserves support expansion without operational compromise. Operational scalability must be evaluated to handle increased demand. Understanding the competitive landscape is vital for strategic market entry. Finally, aligning the expansion path with Breezm's 2027 initial public offering timeline is essential for achieving growth, profitability, and market presence. Balancing speed and stability is crucial. Rapid expansion can lead to operational risks. Focusing on Seoul offers depth but limits market reach. Lean operations preserve capital but risk losing market share. Customization is Breezm's strength, yet scaling may pressure standardization, potentially compromising personalization. Breezm's custom-fit advantage must remain intact during expansion. Robust back-end capabilities are essential for direct-to-consumer models, ensuring exceptional customer experiences. Localization is vital for adapting to global market regulations and cultural preferences. Timing is crucial. Premature scaling risks inefficiency, while delayed scaling may forfeit first-mover advantage in promising markets. Breezm's hybrid approach involves a phased strategy to balance growth and risk. Initially, optimize operations in Seoul to strengthen unit economics. Next, expand nationally while testing international demand via e-commerce. Finally, enter select global markets, focusing on regulatory ease and market potential. This sequential strategy ensures robust capability building and informed decision-making at each stage. Tech startups must prioritize differentiation to avoid commoditization during scaling, focus on profitable unit economics to ensure sustainable growth as expansion amplifies business model strengths and weaknesses. Balance first-mover advantage with operational readiness, considering market maturity and competition. Always center scaling decisions around customer experience to maintain long-term success. Thank you, and Breezm's journey underscores the strategic challenges tech startups face in scaling. Balancing growth with operational excellence, preserving differentiation, and timing market entry are crucial. In the realm of personalized products and AI-driven design, companies like Breezm are not just creating products but pioneering new business models that integrate technology, manufacturing, and direct customer relationships.